Karnataka has established itself as a leading hub for electronic system design and manufacturing in India, contributing 10% to the nation's electronics output. We are also home to 400 plus MNCs with global R&D centers. With over 100 fabulous chip design houses and 40% national share in electronic design, Karnataka stands as a prominent hub for chip innovation in India. Invest Karnataka 2025 will bring more global players to benefit from the state's strong and tech-enabled ecosystem.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, the last day of trade of this week. Well, the markets have actually erred on the side of caution for better part of this week, and that's despite a strong move that we actually saw on Tuesday as well. But since then, the market has been quite range bound, and the usual weekly options expiry related to volatility was also missing from the Nifty during Thursday's session. Remember, today again, it's going to be a big trading session. The RBI's monetary policy decision will be announced. The first one under the new governor, Mr. Sanjay Malhotra, and the street still seems to be divided whether the central bank will finally bite the bullet on the interest rate cuts. And in case that happens, this will be the first time a rate cut would happen in nearly 5 years. So that's going to be big and the most important policy probably in recent years because of this. And while the Nifty was on the back foot on Thursday, it was the broader markets that continued to move with plenty of stock-specific action, results, reactions also coming in both on the positive and the negative side. Well, we did see SBI, for instance, that closed towards the low point of the day post its earnings. The Nifty Bank, despite SBI's weak performance, managed to close in the green, outperforming even the Nifty, and the index has closed higher for 3 days in a row now. So we'll just have to see what really goes in forward. Of course, the rate sensitives, banks, autos, FMCG, realty, these will be the spaces to be watched out for today, as 10 a.m. is when we finally see the policy reaction. As far as the global cues are concerned, in the US, the S&P 500 rose for the third consecutive session on Thursday, adding about 0.3% in trade. Nasdaq rose about half odd percent. Dow Jones, however, lost about 0.2% in trade. But when we did see the Asian markets again, mixed opening is what we saw for the Asian markets again in trade today. For the FII flows also, again, there have been net sellers in the Indian equity markets. They sold worth about 3,500 odd crore rupees in yesterday's trade, while the DIIs bought 2,721 odd crore rupees worth of stock. As far as the Asian markets are concerned, they were trading merely, the GIFT Nifty trends, in fact, merely 6 points higher at 23,689. Flat to a positive start is what we are hoping at as far as the markets are concerned. But let's welcome our guest on board to really understand how the trend could be and the tenor could be of the market. Mr. Mayuresh Joshi joins in. He's the head of equity research at William O'Neill India. Warm welcome, Mayuresh. Good to have you with us. Well, the budget fine print now digested, all eyes on the big policy decision that will come in. We've not seen the markets getting moved a lot with the policy, with the union budget really announcing the tax cuts. But will that finally happen post the RBI policy today is the question.
Morning, Sakshi. Always a pleasure to be on your show. Two things. I think the budget has given path to discretionary spending actually expected to come back in significant fashion as we start the new financial year. The second aspect obviously is the liquidity infusion that RBI has already done to OMOs. So 1,50,000 crores in 3 tranches expected to finish by the end of February is expected to give a large part of the liquidity push that the banking system so desired. And as far as the consensus goes on rate cuts, I think a large part of the analyst fraternity believe that a 25 bips is on the cards. So that's largely just stated in. But it's more the commentary and the direction of RBI that is going to be very, very important for the markets.
Absolutely. So if I have to ask you, Varesh, what's your own expectation in case the rate cut happens? Is it really going to be, big, or will it be just a knee-jerk sentiment positive kind of a move that we will see? Because even if the rate cut happens, a large consensus is what, 25 basis points, and that seems to be priced in probably?
Oh, yes, absolutely. So I think even if a rate cut comes in of 25 basis, that's priced in. But largely, I think, as I said, the direction. because how the global cues are expected to behave,
Yeah.
how core inflation globally is expected to behave, and what happens to our own core inflation is going to be extremely critical. So I think a lot of analysts are also of the belief that if the rate cut does happen, you might see one more rate cut in this calendar year. Probably even in the US context, you are expected to see one or two rate cuts happening in this calendar year itself. And therefore, I think how global data points and domestic data points evolve will be critical. So I think the market is also of the belief that if the rate cut does happen, I think the next rate cut might be with a
Fair point. The pre-open trade has kicked off again on a volatile note. 23,675 right now on the Nifty, 0.3% higher, but it's swinging between the highs and the lows. So we'll just see how it really trades in. Let's look at some of the key heavyweights as to how are they indicating an opening. Let's look at the banks first. SBI post the earnings after yesterday. Let's see how that one is shaping up. Let's also pull up HDFC Bank and ICICI Bank, the heavyweight private sector banks. SBI is opening about 1.9% high end trade. In the pre-open trade, 766 right now. HDFC Bank also showing us some positive ticks, 1759. ICICI Bank, however, down by 0.3%. So mixed trade as far as the banks are concerned. Let's also pull up IT to see how some of the counters there are moving. Infosys, TCS, the heavyweight counters there as well. It'll be important to see whether the RBI policy also mentions as to how are they looking at the weakening rupee. Flattish trade on Infosys, 1919 odd levels, just about 0.2% higher. TCS also about 0.3% up. But Mayuresh, this is what I wanted to discuss with you. Rupee has been consistently weakening. Do you think this will be an important part that we will be looking at in the policy statement that will come in today at 10?
Absolutely. And also, let's not forget, Sakshi, they have allocated a decent sum in terms of managing the rupee dollar parity as well. So what goes through is going to be extremely critical. But the kind of depreciation that we've seen in the rupee is mind-boggling, because we generally expect a 5% annualized depreciation that probably happens. But with Trump coming in, the announcements that are probably happening, I think that has created a lot of upheaval. Not just in the rupee, I think a lot of emerging currencies have also got battered out of shape. A lot of emerging currencies are also devaluating their currencies to be export competitive in this market as well. And therefore, I think RBI statements on the rupee and the direction thereof is also going to be extremely critical. Because let's not forget, we import a lot of stuff which is very, very critical from a trade deficit perspective as well.
Absolutely. So that's something which is going to be of extreme importance. We will keep circling back to what can we expect from the policy. That's the big one that we are watching. And of course, the key sectors there. But let's also look at some of the earnings reactions that have come in. I started off by talking about SBI. So probably you could give us a sense of how are you looking at the earnings there? What does that indicate for the banks and the PSU banks at large, Mayuresh?
So I think decent set. You probably look at how the loan growth has been decent year on year, quarter on quarter. Deposit growth also has been decent. NIMs have remained stable on a 9-month perspective. So if you probably look into account how the 9-month performance has been at 3.1 to 3.13, relatively stable as far as the overall NIMs are concerned. As far as the slippages and the cost to income ratios are concerned, they seem to be in control. And therefore, I think from an earnings perspective, in my own opinion, I think a decent set is what SBI has reported. The ratings and rankings that we see in the market in India, generally for the banking system, look decent enough, Sakshi. So I think banking is one space where the consensus call has been for a lot of the banking community. But my own sense is that they will continue doing well as we head into the next financial year.
They will continue to do well in the next financial year. This was also this very interesting pocket, quick commerce space that also came in the grip of earnings. Swiggy came out with the earnings, and there was a sharp reaction downward on this one with the losses being posted. Also, Zomato came under pressure. That's despite brokerage houses giving higher targets for Zomato versus Swiggy. Today, there is an indicative opening of some improvement at 2% higher, 396. For Zomato also at 230 odd levels. I wanted to understand now Zomato's also changed its name. That's the other important factor. So now we will be calling it Eternal. under which all the 3 to 4 segments will now come in for the company. So Zomato will be the food delivery giant. Then you will have Blinkit as the quick commerce giant. You also will have District as the events play, and then you will have Hyperpure Business for Zomato. And all of this will come under the umbrella brand Eternal Limited, is what the company has announced late evening yesterday. Tell us what's your own opinion on both these stocks now that the results are out. Both had difficult set or earnings that were muted, that impacted the stock prices as well. How would you look at them?
I think one trigger from the budget is that with the tax cuts that have come through, discretionary spending going up, and therefore I think food aggregators will probably benefit with the whole perspective. So that's one tailwind. But there are multiple headwinds as well. So if you probably look at Zomato's commentary, opening up of 2,000 odd dark stores and probably having the period restricted to 26 rather than 27. Swiggy also going down the same path, which probably means that there is going to be excessive cash flows that is going to happen towards these new store openings. And let's not forget, Sakshi, I think the new store contribution margins are negative 8 or 9%. If you look at the cohort baskets, but is probably both. Anything which is opened in the recent times, less than 6 months, have a negative 8 to 9% contribution. So what this really does is the food delivery business might keep on continuing doing well. But the quick commerce business for both the players might come under some sort of pressure as far as margins and cash flows are concerned. And because they will be deploying a lot of their cash on books, 19,000 crores that Zomato has, 10,000 crores that Swiggy has, and anything that incrementally comes through in terms of this aggressive store opening that they probably got in place over the next few quarters, earnings is going to get restricted. So I think you're going to see ifs and buts happen and very volatile numbers coming through. As far as earnings are concerned for both these players. And therefore, I think they might just remain range bound and consolidate over the next couple of quarters, to say the least. So my own sense is that they at best can be market performers. But let's wait and see in the next few quarters how this happens. But ultimately, I think as we head into 27, 28, as all these stores probably come into account, and a large part of the contribution market hit is taken upfront by all these stores, incremental leverage will start paying out. But that's for a different time period. But at least for the next 2 quarters, I think they will largely be range bound.
Fair point. Let's also welcome, we have with us Prashant Tapsi also joining in, research analyst at Mehta's Equities. Warm welcome to you, Prashant. Good to have you with us. Tell us, the RBI policy day, how are you going to be trading today? And which is the index that you would prefer?
I'm a bit opposite to all the market expectations. I'm not expecting any cuts today. I think pre-budget with 1,50,000 crores of the liquidity push before the budget is as good as a 25 basis point support to the liquidity of the bank as well as the market. So we should focus more on the comment what Mr. New Governor is going to give us. So that would be the main important things one should focus more on. A 25 basis point indirectly it's fully capped in. I think technically already a profit booking zone has been started on many stocks as well as in the index. So I am a bit on the neutral side of the RBI comments.
Okay, you're neutral on the side of RBI comments. Do not expect a rate cut. If that happens, do you think markets will be further disappointed, Prashant?
Obviously, yes. I think 100 to 200 points on the market just for a sentimental disappointment which can be expected at 10 o'clock.
Okay, got that. So there is an expectation that Prashant has that would be no cut, but in fact, the commentary will be more important to see. Already the liquidity measures have been taken, so probably the governor could stick to that, is what Prashant believes. Right. We have been discussing about the consumption space. I'll come to you, Prashant, but let me just take that point forward with Mayuresh also. We discussed the quick commerce space, but when it comes to the larger consumption basket, the FMCG players is now I'll come to. ITC reported its numbers as well, Mayuresh. So 5 to 6% cigarette growth, and I think this was slightly higher than the estimates. And it's also going to be acquiring now Mitigo and Presuma in the frozen foods to widening its base right there. So how are you looking at ITC? Now there's a hotels player as well. So this will be standalone, company. Sans the hotels part, how should one be really looking at it post earnings?
So I think if you look at ITC now, ex-hotels as a business entity itself, I think a large part of the contribution which will come through, specifically from FMCG as an example, I think the next quarter also is going to be a little bit tepid for most FMCG players. The incremental benefits will start flowing through as we hit the first half or the first quarter of the next financial year. The agri-business expected to pick up because the consensus here again is that there has been a good Rabi season. There are La Nina conditions evolving, Sakshi. So to that extent, I think the next monsoon is expected to be relatively better, which can probably ensure that the agri element or the agri side of the economy should probably report better set of resilience. And therefore, I think ITC's business should probably hold up as we head into the first half. But my only sense is that because they are investing a large part of their cash flows into new businesses, and we've seen this in the past when they're trying to develop the FMCG businesses, that incrementally the return on capital employed will get restricted. Therefore, my own sense is that ITC again might be a market performer because a large part of their cash flow will probably go into new businesses.
Okay. Prashant, coming to you. Consumption has been the theme since the budget has been announced, and everybody believes that this is going to be a space where we could see re-rating happen because of additional money in the hands of people. This is where reflection could come in. ITC came out with the earnings. We also had Britannia. Q3 was a beat on most parameters. Domestic volume growth is coming at 6%. How are you looking at these large FMCG players, and is there a pecking order that you have, Prashant?
I think you rightly said with respect to re-rating of this sector, but I think one should wait and watch for Q4 numbers as well. Because Q3 as a whole, I don't think it has changed a lot. I think the new budget consumption story will push in more in the first quarter of next financial year. So Q4 would be the watchful quarter for me if there are some kind of volume growth, the way how ITC has shown in the cigarette volumes. So if there are some good volumes in Marico, Britannia, Dabur and all, so then post Q4 earnings, there will be re-rating done. And the story would good for the next 1 year. I think ITC, Britannia, all these three stocks are good at valuations level at current point of time. But ITC numbers were not so great for me, except the cigarette volume growth, which was more than expected. But I think the stock will react negative today. I think and again, 420, 430 can be a level one should wait and watch for that.
Absolutely. Let's look at a few more stocks that you could look at today apart from ITC and Britannia. We could look at Biocon. The company's announced positive data in the phase 2 study of itolizumab. That's another drug that's going to be important for the company. There's going to be Bharti Hexacom here, of course. As far as the earnings came in, margins were at 53% improvement, and revenue has surged about 7.3% on a Q&Q basis. Real estate space, Sobha came in with the Q3 sales value up by 17.8% sequentially. Average realization is up by 17% on a year-on-year basis. Then you also have Cochin Shipyard. There was a weak Q3 that was dragged by the shipbuilding segment, margins around 870 basis points on a year-on-year basis. Some of these key earnings will be important to track again in trade today. So we'll keep an eye out on that. Let's actually discuss this one as well with Mayuresh, Cochin Shipyard and the entire defense space. Of course, there was a 6.5% downtick in the pre-open trade as well after these weak quarterly earnings have come in. What's your own stance on the defense space? Again, the budget was higher allocation was made, but there is still no improvement in the sentiment that we are seeing on the defense space, Mayuresh.
Allocation has been better for the defense space as overall in terms of outlay. Second aspect is that the large part of these defense pools, the order books are already full, Sakshi. So it's not that they are deficient in orders. So orders are already there. Orders are with good margins as well. It's up to the companies in terms of their execution parameters and how they execute these orders and how do they keep their working capital cycle in checks, which effectively means that if they're able to do this, the cash flows that they're able to generate will be significantly better, and that will reflect in terms of their core earnings. I think how we see it in terms of our EPS and RS ratings at MarketSmith, a few of these companies are exhibiting strong EPS ratings, but the RS ratings have gone down, which basically means that there is still some element of apprehension and a lot of supply pressure coming in a lot of these defense stocks at play. Out of the defense stocks, I think VEL had exceptional set of numbers that they posted. And again, I think all these parameters would work in favor of forward earnings estimates for the VEL as well. But again, I think a large part of this pool, in my opinion, is still overheated. I think we just should hit for some declines, allow these stocks to make good basis as we see it at lower levels. And if that probably happens, the strongest of these stocks then probably should be taken into consideration. So I'd still wait for declines and these stocks to make good basis at lower levels.
Okay, got that. We'll take also Prashant's view. Defense stocks, are you looking at any which is looking better, or are you staying away from this space?
I think right now I will go with Mayuresh again. He is waiting for the right correction. So I am also expecting the same thing. Execution is the main question right now. Margin improvements is the second main question. But with respect to defense, again, there was only 8% of allocation, but market was expecting almost 15-20% of incremental expenditure by the government, which was some kind of sentimental negative for the overall industry. So that price action is taking care of that. So I think I'm still waiting for more correction. With respect to return ratios, I think all these stocks are doing great, but question is about execution.
Okay, markets have started to tick 23,610 as far as the Nifty is concerned. We are 0.02% higher as far as the Nifty Bank is concerned. We also have a flattish with a positive bias there, 50,390 currently, 0.02% higher in trade, and it's now shifted lower as well. So it's very, very volatile right at the opening tick. Let's also look at some of the other pockets which are actually indicating. Let's look at some sectors. You have the mid caps up by 0.4%. IT is flat to positive bias. You also have the advances at 970 with the declines at 509. So still skewed towards the positive, but let's see. Very, very mild set of green. Small caps are down 0.2%. IT is now slipping lower. You also have the PSU banks that are declining about 0.2% odd in trade right now at 6,270. You have the auto space, however, still in a better zone. Now you have a 0.5% uptick. Pharma, which was an outperformer yesterday, also 0.2% higher. Metal slight gains can be seen, 0.2% higher for this one. So I think it's the oil and gas that's dragged about 0.5% today. FMCG, IT, CPSE, and the PSU banks that are dragged. And even the capital goods. So it's a mixed trade as far as the sectors are concerned. You have the banks, financials in the positive zone, pharma, auto, as well as the metals, and the realty also about 0.5% higher as far as the realty index is also concerned. On the sectoral trend, this is the picture. Let's look at Bharti Airtel. Earnings came in, ARPU up by 5.1% sequentially, 1654. There's a 2% uptick on this one. ITC, 0.5% lower. Post earnings, you're seeing a 438 level on this one. And Britannia 1.5% higher. Q3 beat on all parameters. Domestic volume growth at 6%. You're seeing a 1.7% uptick at 5,043 odd crores. Let's look at Aurobindo Pharma. Again, strong growth there. Q3 ARV sales are also up. In the oral portfolio, there's also an improvement, and the stock has moved up. JK Lakshmi Cement, again, results impact. Consolidated volumes are up 2% year on year, 1.5% uptick for the stock. Looking at the key stocks now, and Hero MotoCorp also better than estimates, 1% higher, and the results are getting a reflection of that. Let's look at the key stocks within the Nifty basket. Bharti Airtel is the top mover. You have Shriram Finance, Britannia, Ultratech Cement, M&M, Hero. So some auto space stocks which are buzzing. Bajaj Auto also up. Trent is improving, 0.6% higher. You have Cipla, Grasim, Apollo Hospitals as the top movers. On the lower end, Power Grid, ONGC, SBI, BPCL, HUL, HCL Tech, and RIL in the heavyweights, which are actually declining and stemming, in fact, putting the pressure on the upside as far as the stocks are concerned, and the Nifty is also concerned. So let's also look at Zomato and Swiggy. Zomato is opening at 231.7, 1% higher in trade. That's the one that's moving positively. Let's also pull up Swiggy as well to see how that one is reacting. Post the earnings, yesterday there was a sharp fall, 0.6% lower at 386. Okay, coming to you, Mayuresh. How are you looking at the opening? Anything that catches your attention?
I think let it stabilize, because I don't see the market having a runaway rally. I don't see a structural fall for the markets as well. Markets are gestating the earnings which have come through so far, and earnings, let's be honest, have been soft. So I think there will be downgrades as we head into Q4 as well, and therefore it's going to be a market which is going to be range bound. It is going to react to earnings, it's going to react to global factors, it's going to react to policy making, and therefore I think a range-bound overall market direction is what I probably believe in, and therefore I think the next few weeks might just test the patience of a lot of investors, like it has done in the last few months as well. But again, I think post-April, I think there is some sense of hope that earnings should start reviving, and there should be some amount of sanity as far as Trump policies and geopolitics is concerned.
Fair point. Prashant, coming to you, what stands out as something which can catch your attention right in the opening today?
I think Bharti Airtel should be watched on
Bharti.
again. Highest ARPU in the history of Bharti, as well as in the sector. I think about 200. This is the first time what Bharti Airtel has crossed. Their target is to reach almost 250 to 260 rupee per ARPU. So I think that would be the target. And I think for me, fundamentally very strong growth. There may be one time, 4,000 crores of some one-time earnings, but again, despite that, if you remove that, again, the focus would be more on the ARPU. So Airtel would be the first stock I'm going to track this as a trading as well as investment.
Trading and investment bet both after the earnings 3.2% higher, strong ARPU 1673 for Bharti Airtel. Okay, let's come to Mayuresh as well. Telecom space as a whole, there's a lot of tower-related sales happening between Bharti Airtel, Bharti Hexa, Indus Towers. How would you play all of these three?
So I think Airtel looks best placed right now, but again, valuations have probably gestated a large part of the earnings expected to come through. I think the street is penciling around 260 to 65 in terms of average ARPUs for the next year as well. And therefore, I think if you look at the construct, a large part of that has got gestated. What really does is for the entire ecosystem, right? So Jio might also have a stable number coming through. To grow the stickiness in terms of the RMS and the SMS share is very, very critical for telecom players. And because now there is a three-player way, obviously BSNL also coming in from the government side as far as space is concerned. But I think the larger two players are still going to ensure that the RMS and SMS share probably stays with them. At the same time, with ARPU increases, cash flows, deleveraging from balance sheets, spectrum payments as an example, as well as a large part of their capex pool that they've probably done in terms of the 5G ecosystem, the enterprise ecosystem, and the fiber optics as well. I think a large part of that has got capitalized, which means even the incremental number should be okay. The only issue is valuations, and therefore I think within the space, Bharti, if anybody is holding, should continue holding. Obviously, I think earnings is something that will be extremely critical for these players going forward.
Fair point. Mayuresh also wanted to get a sense on the auto space with you. I mean, Hero Moto, came up with the earnings, and post that, how are you looking at the entire two-wheeler pack? Do you think this is the first space where we could see an impact of the consumption boost within the auto pack?
Oh yes, I think that will play out. And Sakshi, let's remember, right? I think the cohorts that you're talking in terms of income tax slabs, I think a large part of those cohort baskets are going to get benefited at the bottom of the pyramid. So I think it's going to be a bottom-up discretionary spending approach that will probably come through. And obviously, I think two-wheelers will also account for that at some point of time. Obviously, Hero, with a large part of its exposure towards semi-urban and rural areas, is going to benefit. Numbers have been relatively better than what the street probably expected. Obviously, there is a lot of competition that is coming through. But the space, specifically, I think the 125 to 250cc, this is the space which is going to be the hottest space as far as autos is concerned. Above 500 and 750, you obviously got tax cuts that are coming through. So there is going to be some element of pricing pressure that will come through for that space as well. But because Hero probably operates in this very, very sweet spot, and the expectations of semi-urban and rural expected to come back in the next financial year, probably within the two-wheeler space at the current juncture, Hero a little bit tad better place than the other two. Again, the EPS rating, institution holding, as we've seen in Cancel, relatively better place for you.
Okay, got that. Prashant, coming to you as well. When we talk about the rate sensitives, we're talking about the banks, autos. Do you think real estate will also be, continuing with its sweet spot space if the rate cut happens? Is that a space that you're looking at?
I think yes, if in case the rate cut happens, obviously real estate and auto, two stocks will react very positively. But again, a sentimental impact, we need to see all the numbers with respect to Q3 earnings as well as Q4 earnings. But obviously, if there is a rate cut starting, which I'm not expecting, but again, the whole long-term trend of the real estate stocks as well as auto stocks will change. I think first re-rating may come into real estate as well as on the auto stocks. That is getting discounted in the price, and the trend is getting started on the charts right now. So overall, auto as a sector, I'm very much bullish. Two-wheeler, I'm bullish on Hero Honda as well as on Bajaj. In four-wheelers, I'm bullish on Mahindra and Mahindra.
Okay, got that. Mayuresh, the other important part that we've been discussing since last week is how internationally and globally we are looking at cues coming in from the US and Trump tariffs and how that could be a big overhang. Is there any kind of a relief that you're looking at right now, or is that still an uncertain space? Where do you think, if at all some negative news comes in, the impact will be first felt?
So I think it's a rhetoric so far, right? And he's done that. He put pressures. He's clawing it back. So I think the next few days and weeks is going to be very, very interesting on how this whole tariff war probably takes place. And there are going to be reciprocal effects as well. I think if he's going to levy tariffs, the reciprocating countries are going to levy tariffs back. And how does that impact global GDP growth? How does that impact global inflationary conditions, global emerging currencies as well? Is going to be very, very critical. And therefore, I think the next few weeks, extremely critical. If it does do that, and if it does that very, very aggressively, my own sense is that a large part of the Indian pool that we probably do, right? I think a large part of our pool is more imports rather than exports at this juncture. Textiles is one space where we are exporting, but I think it's very, very competitive compared to China or Pakistan or Bangladesh at this juncture in terms of the countervailing duties that we probably got. So even if it comes through, I think we are already paying more than what our neighboring countries are probably doing. In terms of heavy machinery, as an example, I think again, very, very selective out there. It's more services exports that we're probably doing. And again, he's made his stance relatively clear in terms of H-1B visas at this juncture. If he continues this stance, I think the entire outsourcing element that probably happens in terms of incremental costs that can come through on IT balance sheets, that might actually reduce to a large extent. So I don't feel that it can be a huge incremental impact as far as a lot of sectors that India probably caters to might get affected.
Fair point. Noted that, Mayuresh. The other sweet spot over the last couple of days again emerged to be the capital markets related stocks. A lot of these stocks are again garnering some traction. BSE, CDSL, Angel One, and of course all the brokerages, AMCs too. How are you positioned on them? I mean, they have had a great set of rally even in the last year. Is there still a lot of steam left, and are there any preferred stocks for you, Mayuresh?
So incrementally, we are all part of the ecosystem, Sakshi. So the expectation, which is that the better competitions will keep on happening over the next few years. As a household asset pool is just 5.34% in terms of the overall assets that we own in the form of equities. And therefore, the expectation here is that SIPs will continue. The expectation here is that demat additions will keep on happening, which benefits the entire ecosystem as a whole. Also, the asset managers itself, the expectations in terms of the cohorts itself, in terms of the large HNI pool that is expected to grow exponentially over the next few years, will mean that asset managers will also remain in focus because of the specialized services that they probably cater to in terms of a multi-asset dictionary allocation as well. And therefore, I think the entire ecosystem should benefit asset managers, asset management companies, brokers, exchange platforms as well. KFin Technologies, I think this is one where our sense is that the PSRS ratings that we see in markets when you are looking strong, decent set of numbers, and therefore anybody can have KFin Technologies on their watch list.
Fair point, noted. KFin Tech we'll continue to look at as well. Mayuresh, thank you so much. Always appreciate speaking to you and getting your wonderful insights, your in-depth research that truly helps our viewers get the perspective of how and why are you looking at certain stocks and why you're not looking at certain sectors. Always appreciate with your time here on Business Today. Hope you have a good time. Let's keep our fingers crossed with that interest rate cut coming in, and we'll discuss what goes further from here.
Thank you, Sakshi. Always a pleasure to be on your show. You guys have a great weekend.
Yes, okay. Time to take a very quick break. We'll be coming back and Prashant Apsi will be with us on the other side. So we'll discuss some stock ideas as well. So stay tuned with us, viewers, right after this short break coming in soon.
Karnataka is the fourth largest automobile producing state in India, contributing 8.5% to the nation's vehicle production. The state also has the highest number of EV charging stations, boasting an impressive 5,765 public stations. We were the first to introduce an EV policy in 2017 and will soon unveil a clean mobility policy at our upcoming Global Investors Meet. Backed by our progressive policies, world-class infrastructure, and a skilled workforce, Karnataka is paving the way for growth in both traditional and EV sectors. Join us at Invest Karnataka 2025 and be a driving force in the future of automotive and EV innovation.
Well, welcome. You're watching Market Today on Business Today Television. I'm Sakshi Batra. With me is our market expert, Prashant Tapsi, to help us look at some of the stocks right ahead of the big RBI monetary policy that's going to be coming in just in 30 minutes from now. We're going to be finding out whether this will be the first instance of an interest rate cut in nearly 5 years or not, and what it means for the markets and as strategies that you should adopt in the markets too. Prashant, you're not expecting a rate cut today because the liquidity measures have already come in. That's clear at this point in time. But how is it that you will be really looking at the commentary? What are the key points that you're looking at that should impact the markets and the sentiments?
I think inflation should be the first point where the new government has to focus more on, because that is hurting a lot for Indian markets right now. And even the talk on a GDP revise or anything which is in line with the budget expectations. So these 2 points, one should focus more on that, and plus a liquidity push additional to the PSU banks, which will also be looked at from the new governor. So it is a first time where the new governor is going to take a call, but we need to understand the behavior of how the new governor will take it forward from current levels. So it's a watchful event for us because obviously for next 2-3 years we will be facing him. So we need to understand his thoughts, how he's looking at the economy right now.
Yes, absolutely. Let's look at some of the other aspects. I wanted to discuss the precious metals and stocks and sectors related to that as well, Prashant. We do know that gold prices have been continuing to inch at record levels. There is, of course, the global uncertainty that's weighing in, and then there is this hope of interest rate cut. In case that happens, that would further appeal probably, the safe haven assets, gold and silver again. How would you look at these and the stocks related to them, maybe gold and silver jewelry players or even the financiers for that instance? Is that a space that interests you?
I think yes, with respect to the consumption story, nobody is talking about the metal as a sector. So people are missing gold as a portfolio stock, and there may be a chance where investors may go and buy some gold stocks as well as gold directly. So I think gold would be the first stock one will be consuming, because one, again, it is a very inflation support stock. Or again, stocks like Kalyan Jewelers, again, something else on the negative side, obviously. But Titan would be one stock one should focus, considering the gold as a business. Again, Senco Gold should be one stock one should focus more on the gold as a business. Overall, I think consumption story will also flow into gold as a business as well as gold prices.
Yes, okay, fair point. I hope this has also helped viewers understand what to position, how to position yourselves on the gold and the silver jewelry. Already there's an expectation that internationally gold prices could cross $3,000 an ounce. So that's the kind of expectation that gold and silver has at this point in time. Even at these record highs, there is an expectation of further, spike as far as gold and silver prices, both internationally and domestically, are concerned. Let's look at some of the other pockets as well. Mid and small caps still, in a weaker zone. Volatile moves are being seen all through as well. How are you navigating through the mid and the small cap names? Is it absolutely stock specific there? Or as a strategy, have you shifted your focus to large caps, Prashant? What are you doing here?
Obviously, yes, a small shift towards the large cap has been seen with respect to valuation, which are comforting more on the large cap. But in the mid cap and small cap, I think still there is a pressure in terms of valuation correction. Plus, the earnings are not so good up to the mark as per my understanding. So I think there should be a wait and watch approach towards the mid and small cap, but very specifically stocks like CDSL or anything which has a good long-term visibility, and there is a good correction from the high of almost 25 to 30%. So if there are some kind of stocks like this, so that would be very interesting for us as well as for the investors. So overall, the focus would be on 60 to 70% on the large cap, but again, stock specific actions can be taken in mid caps.
Yes, let's look at one of the earnings impact that even Prashant is alluding to. Shares of infra company NCC that slipped in trade. Now about 11.5%, but I think 13% cut was also seen intraday, and this is after the earnings have been reported. Remember, this has been one of the stocks where investors have focused on because it's a Rekha Jhunjhunwala portfolio stock, and therefore that got all the retail investors interested in it. 12.5% year-on-year decline in the net profit at 193 odd crores in the third quarter, and after that we are seeing a sharp slip. Even on the operating level, EBITDA fell by 16.6% for the company. Revenue, however, just a mild uptick of 1.6% at 5,344 odd crore rupees, and the margins also stood at 7.9% as compared to 9.6% in the last fiscal's same quarter as well. So there has been a decline on most of the parameters, and NCC now down 12 odd percent. Your sense, Prashant, what would you say on a stock like NCC? What should one do now post earnings?
I think it's again a risky call to take at this point of time. Q3 earnings were below street estimations, as well as if you see last 2 months, I think the stock is underperforming the whole sector. Despite having all the the mid cap and small cap pressure, the stock has underperformed a lot for all the other sectors as well. So when we see revenue drop, when we see profit going into losses, I think that would be a major concern for investors. I'm not bullish on this stock at this point of time.
Fair point. Okay, we'll keep an eye out on that as well, as far as how NCC progresses post those weak set of earnings. Let us again look at Swiggy, for instance, one more time. 0.7% of a decline, 385 right now. We began by discussing with Mayuresh on how should one look at both Zomato and Swiggy. Post earnings, there was a disappointment on both for Zomato as well and for Swiggy too. Zomato, however, is 1.2% higher, but Swiggy is still on the decline after yesterday's sharp cut post earnings. Between these two, how are you looking at the opportunities?
I think yes, Zomato had some kind of additional advantage with respect to their profitability already been proven. So I think the whole industry is going very fast, 40 to 45% growing month on month. So both these stocks will do good in terms of revenue growth, but there will be good cash burn seen in Swiggy to maintain its market share, as well as to have a good competition between Zomato and the other two three new ingredients which are like Amazon is trying something in quick commerce. Again, Reliance is also trying something in quick commerce. So I think there is a huge competition coming in. Swiggy will burn more cash, but I think Zomato has that edge which he can at least maintain his margins as well as growth trajectory. So for me, if you investor want to take a call again, I think 60-70% can be a weightage to Zomato, and 40-30% can be a weightage to Swiggy at this point of time.
Okay, fair point. Another space that I wanted to ask you is Trent. There's been a consistent decline in Trent also. What is your fresh perspective on this one? The best performing stock of 2024. It
Yeah.
slipped in January, picked up some pace in February, but again is extremely volatile. 5,350 for Trent.
I think at the 1st of January on the budget date, due to the consumption story, which government is focusing more on. So I think that was the only sentimental impact. The 2 days the stock has really done well. But again, post its results, there are some kind of month-on-month sales down with respect to store sales growth. So that has given some kind of concern to the prices. With respect to valuations, again, the stock is trading at 100p plus, and again a 40 price to book value, which is still a matter of concern for the sector as of now because of the whole last year, which has outperformed almost more than 1,000 times return. So I think there will be some kind of valuation correction at this point of time. Obviously, due to the re-rating of the industry, due to the consumption story, the stock looks good, the business looks good, but not at this price. I would be going good long when it crosses below 50-100. So it would be a good level to buy.
Okay, but another stock where the results impact is being seen on the negative side, I spotted after NCC, it's Bikaji. 645 currently 12% lower for this one. Again, this has been one of the performers only of the first half of 2024, but it's lost momentum, and after the earnings also there is further decline. How would you look at Bikaji?
I think earnings were really bad with respect to their EBITDA margins as well as fall in the PAT. Even the volume growth by segment wise has seen some negative decline. That is a bigger concern in the stock. Again, on the valuation side, again, it was a bit concern for me to sustain at this point of time. Technically, I see a lot of pressure coming in still. Maybe the stock can see a 500, 550 levels in a very shorter period of time.
All right. Okay. Well, thank you so much, Prashant, for being with us on the morning edition and helping us navigate through various opportunities. The Nifty is still at 23,600, absolutely flat. And there is this cautiousness in the markets right ahead of the monetary policy. We'll just have to wait to see how the reaction comes in post the RBI's monetary policy that begins at 10 a.m. But what we'll do is we'll be back soon with you after winding up this show at 9:55 a.m. for the pre-RBI policy discussion with market experts and economists. And of course, once the policy is announced, we will continue with our decoding of the market trends and of course what the economists expect post the RBI policy decision on the rate front is announced. So stay tuned with us. 9:55 a.m. We'll be back with another special edition on Business Today Television. Stay tuned.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community, startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
Dr. Jaishankar, Minister of External Affairs, to make a suo motu statement under Rule 251